Right out of the gate this morning, fear is gripping the market at 27 out of 100. The question everyone's asking is simple. Why is tech getting hammered on what should be a calm summer Friday? Let's set the stage. The VIX is hovering at 1567, down slightly from yesterday's 16.5, suggesting volatility concerns are easing just a bit. The 10-year yield ticked down to 4.55 from 4.58, giving bonds a small bid. The Fed funds rate stays locked at 3.63%. That macro backdrop should be supportive, but clearly something spooked the market right out of the gate this morning. Here's the brutal reality on the indices. The Nasdaq is down 1.47%, losing 387 points and absolutely leading the downside. The S&P 500 is off 0.51%, down 38 points. The Dow is the relative winner, falling just 0.2%. The Russell 2000 barely budged, down just 0.06%. This tells you everything. Mega cap tech is where the selling pressure lives today. Now let's talk about who's winning. Costco absolutely ripped higher, up 3.17%, crushing it in consumer discretionary. Salesforce and MasterCard are both crushing it, up 3.4 and 3.05% respectively. MasterCard's gaining tells you that payment processing demand remains solid even when growth concerns mount. These are quality names finding safe haven money. But here's where it gets ugly. Intel is down 5.84%, the single biggest loser by a mile. AMD is collapsing too, down 5.33%. Semiconductors are getting absolutely destroyed. Goldman Sachs is down 4.91%, financial services getting hit hard. Google dropped 4.44% and Meta is off 2.46%. Your megacap growth names are bleeding red across the board. What's driving this carnage? The analyst community is actually still very bullish on these names. Amazon has 70 buy ratings, Nvidia has 64, Microsoft has 63. But analysts don't control short-term momentum, and right now momentum is decidedly negative on anything tech or finance related. The real story is August 4th. AMD reports earnings that day, and it could reset expectations for the entire semiconductor complex. Investors are clearly positioning ahead of that event by taking chips off the table today. Watch the 10-year yield closely.